What's going on, guys? Welcome back to another inter-equity trading video. Today's a special one. We have an Ethereum swing long bagging us over $30,000. You don't want to miss this. Let's hop right into the charts. All right, guys, here we are on the chart for Ethereum, breaking down this long position that we took. So starting off with the higher time frames, this is a very standard process. Always work higher to lower time frames. Nothing ever changes. So what can we see here on the daily time frame? We had a big sell-off on the daily time frame to the downside, swiping all of this liquidity out. Okay, now why is this important for us? In our mind, we understand now that since we've had this sell-off from high to low, this induces sellers into the market. Okay, they're going to see this bearish move as momentum to the downside. They're going to see some lows taken out here, which they're going to view as their market structure shift, their break of structure. So eventually they want to see price come up to these regions and continuations. Okay, maybe all the way to the extreme, and then again all the way to the downside. However, we understand that we want to be longing into that liquidity. Okay, now if we can follow this sell-off here that we have on the daily time frame to the left hand side, we can see that we've been respecting all of this highs, basically in and around $3,000 flat. So this is going to be a great target for us. So we can eventually look for longs up into these highs. Okay, so again, we're on the daily time frame now. Let's go down a couple notches. We're going to break down more current price action in front of us. Same thing, highs taken out induces buyers. So anybody looking to long, they're going to be longing in these imbalances down here, in these regions down here, or maybe anywhere above these lows. Again, we understand that. We want to see price below these lows because that traps all the buyers. Anybody, again, that was longing above these lows, it traps them, and then we can look for that continuation to the upside. Okay, and eventually, if I can squeeze this price down a bit, we can look for that long below the lows and then target those highs to the left hand side. So that's how we forecasted everything. Now on more of an intraday perspective for entries, again, any reactions above this low is going to be false. So even if price decided to go all the way long up back up here, we're going to view this bullish move right here and we're going to deem it to be false, meaning we're not going to be involved in that move. Okay, so we'll head over to the 15-minute time frame. You can see if I hover my cursor right in this imbalance here to the left-hand side, this might be an area of interest. So I want to dissect this area and make sure it's an area we can take an entry off of. Let's bump one more time frame down to the 5-minute. So now we're on the 5-minute chart and this is looking better and better. So look at this. We've had a move on the 5-minute up to the upside, taking out some internal highs, and then trapped anybody that was looking to buy above this low. So this whole region now, anywhere in here is now valid for a buy. Okay, meaning this is where we're building liquidity. So if I can grab basically this low to this low, anywhere within this box, and we're going to make this blue, anywhere within this blue box is going to be valid for a buy. Okay, and ask yourself why. I grabbed this low here right where I have the black line and I dragged it across, grabbing this area of interest on the left hand side. Anywhere in this blue box, again, is a buying area because as soon as, and think about this, as soon as we stab below this low, right where my cursor is, liquidity is now taken out of the market. Okay, again, anybody buying above this low down here will be trapped. Okay, and that's very, very important. So what we can do is we can simply set a limit right at that low. Stop loss is going to cover the low from the left-hand side. If you can see my cursor, perfect. And we'll head over to the 15-minute. Remember where this whole setup came from, the higher time frame. So if I head over to the 30-minute and I can zoom out a bit, head over into the hourly, drag it over, look at these highs. Okay, we have this high printed, we traded into it once, twice, 3 times, 4 times, 5 times, and then sold off, or sorry, 6 times, and then sold off to the downside. Okay, leaving all of that liquidity. All right, now if I scroll over, look at this, more sellers. So we understand now that there's going to be liquidity above this blue line. And again, we want to be targeting that. All right. So perfect. We have our whole entry set up. We want to be taking entry below those lows because that's when liquidity is taken. Stop. Going to be covering the low from the left-hand side. Perfect. And we're going to head over to the 4-hour and play this thing out for you guys. So, okay, perfect. And if I can pause this real quick, technically tack this in real quick, but check this out. Look at this 4-hour candle. Spikes the low, okay, right where my cursor is, spikes that low, and then starts running to the upside. Again, why does that occur? Because anybody that was buying above these lows, they've now been trapped. They've now been taken out of the market, and that's why you start to see that real move occur to the upside. All right, now if I continue to play this out, we get a little pullback. That's fine. Deem it to be false and short-lived, and there it is. Target has now been hit, touching actually $3,000 flat. Okay, banking us over $30,000. Now, this is everything on this breakdown. I hope you guys enjoyed. We'll see you guys soon.